Hey everyone, I hope you're all doing well out there. This is your February market review. My name's Dan Westfall. I'm a certified financial planner and I run Client Focus Financial. So I put these videos together each month to give my clients the straightforward information about what's going on in the stock market, the economy, and ultimately how that's affecting their investments that I'm helping them manage. So what I do is I use a lot of charts and graphs to kind of depict what's going on in the market, and I use those just because I think visuals when it comes to investing and stocks especially, or even just different asset class, viewing it on a chart is just more impactful than me just talking about it. So I'll go through a number of different charts here that I've come across this past month, just to kind of hit home some of the topics that I'm talking about. First chart that I have for you is a chart of the S&P 500 over the last year. So the S&P over the last year, you can see, is kind of flattened out over the last, really since like October timeframe, where it pretty much has gone sideways. We're down a little bit for the year right now, with some volatility more recently. Obviously, everything going on in Iran kind of adds to a little complexity just because of how that may affect our economy here, with different things like the energy markets. So and just trade being able to move through like that part of the world. So one of the trades that I'm going to circle back to for clients that I work with that I did at the beginning of February is right after the last market review. I was talking about it at that time of probably doing that later in that week, which I ended up doing, was adding energy to portfolios. This was, I think it was like the first week in February. I don't remember the exact date, but the price was around $52 a share. So right now you can see in this chart that I have up here today, as I'm shooting this on March the 5th, energy's at 56.50. So it's gone up, just under about 10% since that time frame. Big move here, obviously after the start of the Iran conflict. So, but there was still a bigger move happening prior to that. So this was the reason that I had bought this back in February, was because it was in a trading range for a number of years, and it had really just broken out of that the beginning of January timeframe. So that was a part of the portfolio that I had added back that had been part of portfolios over the years, and just added it back in a bigger way. So it's 10% of the sector rotation strategy that I manage, which is just a more aggressive investment strategy, predominantly all in stocks, although there's a little bit of Bitcoin in that as well. So that's a big move. I took that money in that position from the healthcare sector, which healthcare today isn't doing very well, but it's basically gone sideways for the last handful of months. So the chart that you're looking at there is showing the price of healthcare, the healthcare fund, down at 153. So that was sold around 156 at the time when I did sell that. So down a few percent since then, but really the whole purpose behind that was, I needed to take the money from somewhere. Healthcare just happened to be in its own trading range, which it's still sitting in that trading range even with the big drop off here now. And that was after a run up that it had in the fall. So I don't want to leave it sit there if it's not moving in any one direction right now, especially when there's an area like energy that's moving a little bit more, with a little bit more thrust to it. So those were a couple, bigger trades that were made here last month. Yeah, definitely the whole goal of portfolio management for me is just making these little tweaks and changes ongoing to add value for you guys out there that are my clients. Making changes like that'll add another 1-2% over time to portfolio. So right now we're in a pretty good spot though overall with the market while we're pausing. And we looked at that first chart with the S&P over the last year. If we look at a chart over the last 5 years, we're hitting this like kind of pause point there right at the very top. It's always, for me at least, interesting to hear from clients that I have out there that will reach out to me, and then they kind of share their feelings of what they think is going on with the markets based on whatever news outlet they're watching or information that they're hearing. And I've heard over the last month a number of people either asking me, how are things doing, because I heard we're down, which is interesting. If you're looking at this chart here, obviously we're not down. We're right at an all-time high and just, a few percentage points off of it. But I've heard a lot of that, which is actually, when I hear it from one or two people, it's kind of like a one-off. But when I hear it from a handful of people or more, it's, there's definitely more to it, because, obviously there's something that people are picking up on out there that is a little bit more like general consensus. So I call it barbershop talk, where people are just talking about these different things that they think is happening, but may not actually be true, and it just spreads around like a rumor at a barbershop. So right now, though, I think we're at a really good spot from a longer term standpoint, just because we're taking a pause. It's not like stocks are just continually going straight up. Last year at this time, we went through a little bit of a drop off around tariff announcements, but that was after we had gone through a really big run up in 2024 and continuing into 2025 last year. So the fact that there's a little bit of a pause in the overall market as a whole, not necessarily a bad thing, because you can't just go straight up, because when that happens, inevitably there'll be some piece of news that comes out or change in the market that then leads to a really big drop off, which becomes a lot more painful. So it's a good sign that we're taking that little bit of a pause within the overall markets. One of the things that I think is very optimistic, that I think is a sign that if we do go through some sort of drop off, which inevitably there's going to be a drop off for one reason or another, one of the signs that we have a lot of money that's sitting in cash on the sidelines. So there's a chart that I come across. There's money market charts are kind of sometimes deceiving, but this one I thought was interesting because it went back through 2008 timeframe all the way through today. The one we're looking at is U.S. money market mutual fund assets as a percentage of the stock market cap. So that's just basically looking at how much money is in cash or cash equivalents like money markets versus in the stock market. So generally, there's going to be a higher percentage in money markets or cash-like equivalents than in the stock market because of higher risk that's perceived. So like 2008, that was a really volatile time frame. Stocks were dropping off the cliff. People ended up moving their money over into cash or money markets just to make sure that they weren't losing money. We saw that again during COVID with that little bump up. We saw another little bump up again last year. So we're at a spot right now. There's still a large percentage of markets, relatively speaking, versus like if we look back in 2018, 2019, it was closer to 10%. Now we're kind of trading at that 13% level, and that's with stocks moving a lot higher. So I think that if we're to go through some big drop off within stocks, the likelihood of the stock market staying down very long, I don't think is very high, just because so many people have money sitting in cash that are either waiting for opportunities to put it to work, or they haven't realized yet, or they're starting to realize that the money they had sitting in either CDs or money markets or high yield savings accounts, they're now earning less on that. So that's a more common thing that I've been coming across in my side of the desk, where people are coming to me because they have money that they were making 5% on, or they thought they were making 5% on, and then now they realize they're only making like 3 or 3.5% on it. So that's because interest rates have come down, and there's a lot of people that just haven't paid attention to what they thought that they were making and what they're actually making. So that money is going to find its way back into the stock market at some point, because there's a little bit of a break even that ends up happening, where if you're getting paid so little with the interest from savings, that you're more apt to just put that into a more aggressive investment, something like the stock market, because you might as well get paid something for it. So we'll see more of that, and I wouldn't be surprised if there is a market drop off that it's very short lived because of all the money that's still sitting in cash. So that's what I got for you this week or this month. If you guys have questions, feel free to reach out to me. Be more than happy to have a deeper conversation with you. From a quick little admin side of things, if you are looking for tax forms, if you go to the Documents tab in your client portal or on the Schwab website, that's where you're going to find your 1099 tax forms that you're going to need for tax filing. So if you have an IRA and you didn't withdraw any money from there, you're not going to get one, at least for that account. If you have a taxable account, I often refer to those as middle bucket accounts, but that would either be like an individual or joint account. Maybe if you and a spouse have that, you're going to get a 1099 for that. So make sure that you use that to do your tax reporting. If you withdrew money from a traditional IRA, you're going to get a 1099 for that. So use that for your tax reporting. But if you're looking for those 1099s, they were probably mailed out to you. But if you didn't get them, go online to either the client portal. You'll find it in the Documents tab, or the Schwab site, and you'll find it in the Documents tab there as well. So, but if you have questions, reach out to me. I'm more than happy to answer any questions about your portfolio, or just general financial questions that you have. If you know of anybody you think would be interested in having a deeper convo with me, get them in touch with me. Give them either my number or get me their number, or put us in a 3-way text, and we can connect that way. But if we don't chat here this month, I appreciate you guys all taking the time to check me out. Until next time.